both economies will lose if there's a major disruption in the relationship. We do have an overall surplus. We have a slight deficit in goods, but a strong surplus in services. And more importantly, in major sectors like autos and high technology products, food products and other things, there's a tremendous interdependence between the U.S. and Canada. We sell them a lot of agricultural products. We trade parts across the border. They're part of an integrated North American supply chain. And like I said, that's what enables us to compete effectively with China and with Europe. Our real competitors are the big Asian companies, the big European companies, and if we want to remain competitive, instead of starting to raise tariffs in the United States, isolate our market, we need to strengthen these trading arrangements, particularly NAFTA. We should have done TPP and we should have done the transatlantic trade agreement, because all of our trading partners are busy integrating their economies with each other in free trade deals, while the U.S. is raising tariff barriers and closing a lot of its markets. This is going to be a major problem for our ability to compete with Europe and Asia.
Alan, how do you assess whether a revamped deal, if Canada can get there, and even between the U.S. and Mexico, has any economic implications or any major changes for the supply chain? And how should investors view that?
I think it may have some major implications for across the Mexican border because of this high wage provision that's in there. That's probably pretty much irrelevant to Canada, where wages are as high or higher than in the United States. But, you know, the whole thing is borderline crazy. We have this very workable free trade arrangement with Canada and Mexico, with some exceptions, but mostly free trade. There's robust dispute resolution mechanisms, which have worked pretty well for the United States. And, you know, fundamentally, the whole thing reflects a gross and grotesque misunderstanding of the benefits of trade on the part of the President of the United States. And his party just seems to be rolling over the formerly free trade party. It's a shame, I think.
Well, why do you think the market doesn't seem to agree with you? I mean, investors aren't treating this like it's some major disaster.
It's a really good question. My hunch for a long time, at first they were, you may remember, and they were dancing up and down as the trade restrictions looked more or less serious. I think now the markets are somewhat inured to it and very complacent. They don't really believe, I don't think, either that the U.S.-Canadian trade relationship is going to blow up in our faces, or even that the U.S.-Chinese one. I think the latter is more dubious than the former. I think the U.S.-Canadian relationship will get solved one way or the other, and probably quickly. I'm less sure about the U.S.-China.